Prayers.
Let us pray. Almighty God, who has called our nation to a place of trust and responsibility among the nations of the world, we humbly thank thee for all the ways in which you have blessed and guided us unto this day. We confess before thee with shame all that has been evil in our history, and all that makes us unworthy to be called a people. Take from us all pride and greed and injustice, and grant us a spirit of unselfish service, which alone can make us great. Through Christ our Lord. Almighty God, who has given us this good land for our heritage, we humbly beseech thee to bless us with honorable industry, sound learning, and unwavering faith. Defend our liberties, preserve our unity, endue us with wisdom and grace, and all those who are entrusted with the authority of government, and never lead us in the paths of righteousness and peace, to the honor and glory of thy name, through Jesus Christ our Lord. Let us say together the Lord's Prayer. Our Father,
hallowed be thy name, thy kingdom come, thy will be done on earth as it is in heaven. Give us this day our daily bread, and forgive us our trespasses, as we forgive our trespasses against us. And
lead us not into temptation,
but deliver us from
evil.
For thine is the kingdom, power, and the glory, forever and ever. Amen.
May the grace of our Lord Jesus Christ bind us together, and that his Spirit may always dwell among us. Amen.
The Senate is in session.
Messages from Her Excellency the President. Announcements by Your Honor the President.
By way of announcements, I've received communication from the Honourable the House of Assembly, which reads as follows. Message from the Honourable the House of Assembly to the Honourable the Senate. The Honourable the House of Assembly has the honour to inform the Honourable the Senate that on the 16th day of February 2024, the Honourable House of Assembly concurred with the Honourable the Senate in committing the following bills, namely Cybercrime Bill 2024 and Mutual Assistance in Criminal Matters Amendment Bill 2024 to the Joint Select Committee standing on governance and policy matters, and that the committee be empowered to consider the principles and merits of the bills and to report no later than 3 months from the date of its reference, dated the 20th day of February 2024, and signed by His Honour the Speaker. With further announcements, minutes, Wednesday, February 14th for deferral. Senator Cummins.
Mr. President, I beg to move that the minutes of Wednesday, February 14th, 2024 be deferred.
The question is that the minutes of our meeting held on Wednesday, February 14th, 2024 be deferred. Will all honourable senators in favour please say aye. Those against please say no. Methinks the ayes have it. Those minutes are therefore deferred. Further announcements, indications of excuses for absence from Senator Tate and indications of late arrival from Senator Mr. Maynard and Senator Kevin Boyce.
Presentation of petitions, presentation of papers.
Senator Cummins.
Mr. President, I have quite a number of documents to be laid today, and I am commanded to lay them as follows. The Instrument Convention 155, Occupational Safety and Health, 1981, number 155, and Recommendation R164, Occupational Health and Safety, 1981, number 164. Second Instrument Convention, 1987, Promotional Framework for Occupational Health and Safety, 2006, number 187, and Recommendation 197, Promotional Framework for Occupational Health and Safety, 206. The following are recommendations which are also to be laid. Recommendation 147, Occupational Cancer, Recommendation 1974. Recommendation 160, Occupational Health and Safety, Dock Work, 1979, number 160. Recommendation 171, Occupational Health Services, Recommendation of 1985. Recommendation 175, Health and Safety in Construction, Recommendation of 1988. Recommendation 192, Safety and Health in Agriculture, Recommendation of 2001. Recommendation 194, List of Occupational Diseases, this is at 2002. Recommendation 207, Safe and Health Working Environment, Consequential Amendments, Recommendation of 2023. And finally, Recommendation R004, Lead Poisoning, Women and Children, Recommendation of 1990. These are the documents to be laid, Mr. President.
Reports from select committees, questions to ministers, requests for leave to move the adjournment of the Senate on matters of urgent public importance, statements by ministers or parliamentary secretaries, personal explanations, motions relating to the business or sittings of the Senate and moved by a minister, introduction of bills.
Senator Cummins.
Mr. President, I beg to give notice of the Caribbean Community Movement of Skilled Nationals Amendment Bill 2024 and to beg that this bill be read a first time.
The question is that the Caribbean Community Movement of Skilled Nationals Amendment Bill 2024 be read a first time. Will all honourable senators in favour please say aye? Those against please say no. The thanks the ayes have it. The bill is accordingly read a first time.
Public business.
Public business is now the order of the day.
Order number 5. In the name of Senator Dr. the Honourable Shantal Munro-Knight, Minister in the Prime Minister's Office, to move the second reading of the Financial Institutions Amendment Bill 2024.
Before I give Senator Cummins the floor, there was one item I omitted during the announcements, a pleasant item, to welcome a young law student completing a degree in maritime law at Southampton University, Emerald Alkins, who is visiting with us today. Ms. Alkins, I trust you will find today's session interesting and will add to your experience and knowledge that you're gathering. And the guest of her Honourable Deputy President. I understand that Ms. Alkins is attached to the Ministry of Foreign Affairs of Barbados. Happy to have you. Senator Cummins. Sorry, Senator Dr. Shantal Munro-Knight.
Thank you, Mr. President. Mr. President, there are some amendments that we will undertake in this honourable chamber. Some amendments that may seem small but have a big impact. And I believe, Mr. President, this amendment this morning falls within that realm. All of us, I believe, or the majority of us, have reason to engage the commercial banking sector. Some of us may have more reasons and some of us may have much more in the commercial banking sector than others, but nevertheless, we all engage at different scales, at different levels with the commercial banking sector. And therefore, this amendment is one that I believe then that will be of concern to all of us. again, even though it may be seen as a small amendment. Mr. President, I remember when certainly I started work, I think within the week or before the week had completed, my first act was to open my bank account, but not only in a commercial bank. I remember very much my parents saying to me, well, you have to open a credit union account. So I opened the bank account, but I also opened the credit union account. And it was also something that I passed on to my daughter as well, even though she's not working, but telling her about the tenets of saving, opening a bank account, going to the bank, etc. Some of the statistics that I've seen would suggest that we have almost a 99% or 98% of a bankable society, that is, that the majority of us, either 98 or 99%, are engaged with the commercial banking sector, have either a checking or savings account in the commercial banking sector. And Mr. President, so this amendment to the Financial Institutions Act, CAP 324A, which seeks to strengthen the ability of the central bank to give guidance and directives to the commercial banking sector on the setting of fees and other bank charges, is again extremely important. And the amendments also seek to ensure that we bring the Financial Institutions Act into alignment with the Central Bank Act, as well as the National Payment Systems Act, in relation to the powers that they give to the central bank already to issue guidelines and to issue directives as well. Mr. President, certainly there has been some concern in relation to the bank charges that we have been seeing commercial banks set, and I think there has been a level, and this is not only recently, Mr. President, a level of outcry from the society at what many consider to be the arbitrary way in which these bank fees and charges are set. Again, because we all kind of engage, not all kind of, but because we all engage within the commercial banking sector. I would know sometimes that I would see a message pop up, when I go into my bank app, that would indicate to me that from this time to that time, the bank fees or something will be changing, or you would see a notice come out in the newspaper, and you would just know that bank fees or charges relating to your banking activities are going to be increased. So there was a level at which the society was concerned that there seemed to be an arbitrary nature to the setting of these fees and to these charges. And also as well, Mr. President, that concern even led to, I believe, I would say a notion of which the society feels as if we are almost paying the banks to keep our money, with the level of charges and fees sometimes that we have to bear. In fact, Mr. President, I would want to suggest that if you look at the fact that as we have seen these increases in the bank charges and fees, that we've also seen a decline in our deposit interest rates. In fact, as at December 2023, the deposit interest rate that we are receiving, Mr. President, across the banking sector, the central bank indicates is at 0.2%. And again, and if you look for most of 2022, Mr. President, starting from March 2022, June 2022, September 2022, we were receiving 0.1%. So that even as we are seeing our charges going up across a multiplicity of things, the deposit rates, Mr. President, we've also seen a decrease. And I say that, Mr. President, because if you look again at from 2018, when we were steadily getting 0.2%, and as I said, then you will see from March moving down to 0.1, and we've then at December 2023 now back up that percentage. So that we note, Mr. President, that those of us who want a higher deposit, we have some options. We can open a fixed deposit, account. But very often, Mr. President, that is not available to everybody, because if you got a fixed deposit account, sometimes, depending on where you gotta make sure you deposit a certain amount of money, you might gotta keep it there for a certain amount of time and all of those things. So that for the general population, we are faced with this dichotomy then of, again, like I said, these lower deposit interest rates, even as we see these rise in the bank charges and the bank fees. But interestingly as well, Mr. President, this increase, and I want to say as well, the increase in terms of the arbitrary nature in which they are done, because that is what the amendment is seeking to provide the central bank, again, with a stronger level of ability to control and to manage. And it is not that the central bank is seeking to set the fees or tell the bank, but it is saying, give some notice. It is saying, explain why, provide some level of justification, and particularly, Mr. President, I want to suggest that justification for those bank charges and fees come in the wake that we have a commercial banking system in which the liquidity within the banking system currently, Mr. President, is at extreme high. The statistics suggest that, again, at December 2023, we have liquidity within the commercial banking sector of some $11 billion. $11 billion of liquidity. And that is borne out, if you look at the central bank reports on the financial stability, that is not a recent vintage of 2023, Mr. President, but the excess liquidity within the banking sector is something that has been there for a while. In fact, in the midst of COVID, Mr. President, we had a banking sector that was also extremely liquid. So that a release, Mr. President, from the Central Bank of 2021 reporting on the robust performance of the banking sector, noted that one of the key reasons why the banking sector was able to perform as it did throughout COVID was because of the liquidity within the system. The report noted that it was well above requirements, and that for commercial banks, as opposed to trade unions, that it had been growing for some time. The report went on to say, Mr. President, that because of that, commercial banks then, in the context of COVID, were able then to have sufficient liquidity to be able to provide the moratoria on payments for persons, but also as well still satisfy the day-to-day operational requirements of the bank without in any way jeopardizing their operations again. In fact, the report went on to further say as well, and I quote, "This is the result of a combination of an increase in deposits." So Barbadians were putting more money into the banks, and a recent decline in loans being issued. Barbadians have been saving and not borrowing as much. That was a 2021 report. Again, 2022, the same central bank financial stability report, these are all available online, says that the majority of the sector's financial stability metrics improved, including asset growth, credit quality, liquidity, and capital adequacy. And profitability picked up for banks and finance companies in 2022, while it remained unchanged for credit unions over 2022. And again, noted that for credit unions, it dipped from March. But that was in the banking sector. All of the metrics showed a steady increase. So as I said, Mr. President, we have this excess liquidity within the banking sector. And again, if I go back from June 2022, we were seeing again that excess liquidity in the range of 11 billion, right through to December of 2023. And Mr. President, if I go back even further, starting from March 2021, again, the excess liquidity was around the range of about 10 billion within the banking sector. And so, Mr. President, so we have a banking sector that has excess liquidity. Businesses are saving more, not necessarily borrowing as much, but at the same time, we also see a banking sector that continues then to increase these bank charges and fees, Mr. President. It would appear, Mr. President, on the surface of it, that along with making money from the lending portfolios that they would have, commercial banks are also seeking to ensure that they can make the most of the passive income as well from transactions as well. And this is not the first time that we've had, Mr. President, as I said, the concern around the fees that are set by commercial banking sector and the extent to which the commercial banking sector in relation to its customers are ensuring that they're also as well, Mr. President, or I'll use the word, being fair to the banking sector. Actually, not to the banking sector, but to its customers. In 2020, the former governor of the central bank, Cleverson Haynes, had cause to make the comment that if we were not careful, that if the commercial banking sector was not careful, that we could see a threat to what he termed financial inclusion. That he said that while Barbados, yes, had a high bankable rate, that we must guard against the fact that some Barbadians may be forced to withdraw from the banking sector if they were not then able to maintain their accounts because of the high charges and fees. And Mr. President, I did some further research and noted that this issue of financial inclusion, Mr. President, is one that is of concern worldwide. And that, in fact, the literature would suggest that it's important for central banks and other regulatory agents to be able to step in to guard against that behavior in order to ensure that we maintain, and we, us, Barbados, but globally as well, that sense and notion of financial inclusion. And Mr. President, this is a real thing. When I was preparing for this debate, I recalled, I think it was about 3 years ago, I had a young man who used to come and do some cleaning around the house. And he came to the house outside of when he was cleaning. I was a little bit cautious anyhow, so I opened the door still when he knocked. And he said, "Ma'am, I want to ask a question. I want you to help me work through something." And he was saying, you know, he was trying to open a bank account. He was right to ask some questions, and he doesn't understand what he needs to do and why it's so difficult in terms of him opening a bank account. So this was a young man, small business owner, cutting lawns, doesn't have a car, anything like that. And he was saying, I want to be able to save. I want to be able to put my money somewhere in the banking sector. So outside, Mr. President, of the difficulties of actually getting to open the account, which is a bigger debate, because he said, you know, I really only got one piece of ID. Don't have a driver's license, never traveled, so he didn't have a passport, so he had his one Barbados ID, but they were requesting 2 pieces of ID. Anyhow, like I said, a different conversation there, because I think most of us also as well struggle, Mr. President, with the demands of opening accounts and getting mortgages and all of those things. But he said to me, you know, but ma'am, when I was talking to the guy and they were explaining all these things, that he gave me this piece of information and he was telling me, well, I got to maintain the account, I got to keep a certain percentage of money on the account all the time. But he said, but I don't understand. I can put money there all the time every month, but I may need to take out the $50 or the $20 because in that month or that week, I need to put gas in the lawnmower to be able to get it. So he said, that means that my account will get closed down, so every time I want to put money on it, I got to go open another one. Truly puzzled in terms of trying to understand how he, a young man, struggling, small business owner, but with a genuine desire to enter into, like all of us, to participate within the commercial banking sector, how he could find himself within that space, Mr. President. And he looked at me, and I looked at him, and I said, go and talk to the credit union. Best advice I could give him, go and talk to the credit union. But there is a risk, Mr. President, as I said before, And as I sought to relay what the former governor of the central bank, Cleverton Hayes, was saying, that we have to guard against, and I would say, financial exclusion. That the banks has to function in a way that they see not only those of us that can come within the banking sector with large sums, but that we have to guard against.
Those of you?
No, Mr. President, I was looking across the table, actually. I was looking across the table when I said that. I was looking across the table when I said that. Those with large sums to enter into the frame, unlike those of us who may have smaller sums to enter into the banking sector. And this is important too, Mr. President, because you would know that Barbadians have tended to be risk averse, right? We've come from a period where we've put the money under the mattress and put the money in the little tot. Actually, it took me, and I can be aging myself, when my daughter was born, the first thing I gave her was a little piggy bank tot to put the money in. And I remember when I was taking her to open her first bank account for her, is that I took all those tots with me. So I was in the bank with a bag with taking out 3 or 4 little piggy bank tots. And so we've come from that space where we've encouraged Barbadians now to enter into the banking sector, and we need to be able to make sure that we can safeguard that space. And again, particularly in the context of this amendment, that then we reduce the level of the arbitrary nature in relation to the assignment of the fees and charges. Mr. President, if you look across at the number, just the range of banking fees and charges that we have to navigate and pay into the commercial banking sector. Mr. President, we pay ATM fees. Some of us pay teller fees, minimum balance fees, paper statement fees, large value withdrawal fees, point of sale transaction fees, monthly service charge fees, and then recently the proposal for us to pay fees to use the digital payment services as well. All of those. ATM fees, teller fees, minimum balance fees. If you look, Mr. President, as I will, at the income composition across the commercial banking sector, Mr. President, fees and commission form the largest portion of the revenue of the commercial banking sector. Fees and commission, of which the highest is, again, Mr. President, you have service charges on deposits, and as well the charges applied to loans and advances. So that there is a large sum of money that the commercial banking sector is taking in, that passive income, Mr. President, from these fees and commissions. So, Mr. President, as I said before, so we have these fees, the banking fees that are being charged, we have low interest rates, we have the fact that Bajans, according to the statistics at 2021, were saving more, but not borrowing. But also as well, again, the statistics also show that the bank does not have a very large problem with non-performing loans either. Yeah? So that, according again to the central bank notes and the releases that they do on the financial stability, it states that bad debt provisioning as at March 2023 was lower for banks, but increased for credit unions and finance companies. Yeah? Similarly, the stress test proved that the capital levels were adequate, and in the case of commercial banks, extremely robust up to the end of March 2023 again. So the question is, excess liquidity, issuing guidance to commercial banking sector around the issue of these banking charges and fees. In fact, Mr. President, in St. Kitts in 2022, the central bank governor there indicated again, in the context of that central bank issuing guidance. And he said, and I have to quote it because it was very interesting for a central bank governor, he said, "I think that the application of these charges stretches any sort of fairness boundaries or consumer financial protection ideas that we may have." He said it stretches any sort of fairness boundaries or consumer financial protection ideas that we may have. And that he was speaking particularly in the fact, at least in St. Kitts, again, the application of fees to the online banking transactions. And again, Mr. President, if you look across, like I said, across the EU, in Cyprus, as well in the United States, again, the same concerns from consumers and the same calls and the same active intervention, either by agencies that are central banks in a stricter sense or other regulatory bodies also as well, seeking to ensure that, again, that they can maintain financial inclusion within the banking sector by being able to issue these directives. And for us, it is again not the first time that the central bank has had to intervene in this way to protect the financial inclusion and interests of consumers. In October 2021, the central bank mandated that commercial banks could not charge their clients for using their own ATMs and cap the amount they can charge their clients for using other banks' machines at $3 per transaction. 2023, Mr. President, the central bank also had to issue a directive that all Barbados' commercial banks offer at least one bank account without any maintenance fees, including inactivity fees or service charge attached. At that time, the release from the central bank indicated that the central bank was interested in ensuring that the banks focus on financial intermediation rather than supplementing income through these fees, Mr. President. The banks argue that we can't, as customers, have it both ways, right? We can't have increased interest rates while at the same time they are then able to keep lending rates at the very lowest. So they argue that, that there's a trade-off there. But it's important, Mr. President, because I, for one, would love to be able to examine the lending portfolios of many of the commercial banks, and to be able to see how that is made up, and in particular, the extent to which the commercial banking sector is investing in helping small and medium-term enterprises grow, the extent to which the commercial banking sector is promoting entrepreneurship, all of those things that are part of the fuel and the engine of growth for economies like ours. But Mr. President, I actually do have some information just on what that lending portfolio breaks down to in a broad way. But before I get into that, I note that ECLAT had actually did a regional study in 2020, and it was examining, and it included Barbados. So this was a Caribbean study. Because sometimes we say ECLAT, sometimes ECLAT don't always focus on the Caribbean, but this was actually a Caribbean study that was done by ECLAT. And that study in 2020 focused specifically on examining the commercial banking sector in the region. And it noted that the region had what they call a high level of financial weight of around 68%, which is basically a high level of liquidity within the banking sector within the region. But they also noted as well that generally the commercial banking sector across the region had the propensity to issue what they call mainly short-term credit. And those short-term credit, and even if they are medium-term, for the most part, are focused, Mr. President, on the provision of loans for cars, consumer credit cards, personal loans for Carnival or Christmas. That was actually in this study. Yeah, that was actually in this study. And that actually what the banking sector in the region was deficient of was actually as well, one, providing financing for all businesses, and 2, for all types of financing for small businesses as well. The study showed that the commercial banking sector did not have a lot of interest in supplying loans and support for small businesses because, again, we know that we have a low appetite for risk. And for many of them, these small businesses posed a level of risk because, again, they were not able to show high levels of profit, have all of their banking, all of their audited financial statements and those sorts of things. And therefore, the bank was not willing to engage, even though, Mr. President, even though where there were support mechanisms provided to guarantee that, as our central bank would have done, the banks were still not willing to engage and to be able to provide support. They also noted as well that the most longer-term loans that were given within the economies of the region were from mortgages. Again, which is also interesting, Mr. President, because again, if you look at the mortgage structure, the banks are also reaping significant interest and profits on those mortgages. So on the one hand, they're giving loans, again, for cars and Christmas and carnivals, short term, and then on the other hand, for mortgages where they're also benefiting as well. And like I said, Mr. President, I have some statistics, again, looking at the how the banking sector here in Barbados is providing loans. And again, similarly to what we found in that study, the highest percentage of the loans indeed go to mortgages. Highest percentage of the loans, Mr. President, actually go to mortgages. Looking here, we then have as well, just in terms of the sector, the highest sector, other than the household, up to 2023, that the banking sector loans to is purchase of property, which again, mortgages, right? Mortgages, not household, but mortgages, again. And that was 22.4%. All of the other areas, construction industry, 5.3%. Working capital, Mr. President, 14.5%. Purchase of plant and equipment, Mr. President, 5.9%. Purchase of property, 2.4%. Mr. President. Then, again, looking at household debt, again.
All right, just for the record, from what do you quote?
From a quote to central bank statistics, please. All of these are central bank statistics.
Thank you.
Yes. And then, Mr. President, again, from the central bank statistics, when you look at household debt and how that is made up, again, mortgages is the highest, then followed by credit cards as well. Mr. President, I also, as well, must say that I also want to be very fair to the banking sector, because it's important to recognize as well that the commercial banking sector must also as well make sure that they are aligned and follow the dictates of international financial institutions that set a regulatory framework. So, admittedly, many of them have to make sure that they put in place processes in order to curb money laundering and the financing of terrorism, with stricter anti-money laundering frameworks, as well as countering the financing of terrorism. And then there's also the Know Your Customer regulations as well. So, admittedly, there are a number of regulatory frameworks that the commercial banking sector must make sure that they adhere to. And this as well could explain, Mr. President, some of the difficulties, as I said before, that some of us may experience just in terms of going to the bank, trying to open the bank account, trying to get that mortgage, the number of things that you have to be able to comply with. I actually had a gentleman who I was talking to the other day on a different matter, and we were talking about, it was about culture, and, wanted to do some work in the cultural sphere. And he was saying that, it was taking him about a month or so to work through the process of opening a bank account as a charity. Opening a bank account as a charity. And he was saying, Shantal, it was almost like, you gotta tell them what you had for breakfast. I said, no, you ain't wait, tell them what you had for breakfast. You gotta go back even further and point out how much money you're gonna spend, list everything you're gonna buy at the supermarket, wash it off, bring it home, put it in the fridge, and then walk them all through that entire process just to get your bank account open. But like I said, in fairness to the banking sector, identifying that, yes, Mr. President, that they have to adhere to a number of regulatory frameworks, and those regulatory frameworks are expensive because it means that they have to put things in place, whether in terms of forms or personnel, in order to make sure that they abide. And importantly as well, Mr. President, there's also the big risk of being de-risked as well, which will have multiple implications as well for us and how we operate as well. So there are important considerations from the banking sector. But at the same time, Mr. President, it is important to note that this amendment is seeking to ensure that the banking sector can clearly justify what those fees and charges are for, and like I said before, being able to make sure that we give notice as well, and proper notice to the central bank, first of all, in relation to the charging of those fees, and also as well then to customers within that same frame. So that, Mr. President, within the amendments here, we are up to the Financial Institutions Act, like I said before, CAP 324A. We are seeking to amend sections 95, 114A, and 115, Mr. President. And there's also as well a small amendment as well to section 43. And like I said before, these amendments are intended to strengthen and expand the powers of the bank. Particular section 95, as it currently, Mr. President, provides that the central bank may require a licensee to disclose the basis for imposing a charge where, in the bank's opinion, that charge is unreasonable. So it's already there, Mr. President, in section 95. The proposed amendment seeks to expand the section to include fees, because it said for imposing a charge. So all we're making that amendment to section 95 is to make sure that it include fees. In addition, Mr. President, provision has also been made in the amendment to section 95 to include timelines. In particular, a timeline of 60 days written notice to the bank where a licensee, which includes a commercial bank, intends to impose a new fee or charge or vary an existing fee or charge. Additionally, a timeline of 30 days is proposed within which the bank is to inform the licensee whether it objects to the proposed fee or charge. And this amendment allows the central bank to give direction to the commercial banks in relation to the fees or charge. The proposed amendment to section 114A seeks to ensure coherence with the Central Bank Act. The current provision speaks only to the power of the bank to issue guidelines. The amendment is necessary for the sake of consistency now, that allows then the banks to issue guidelines and directives. So like I said before at the very beginning, it then ensures that there is consistency, Mr. President, with the Financial Institutions Act, the Central Bank Act, and then also as well the National Payment Systems Act as well. The proposed amendment to section 115 seeks to provide that the bank may make regulations relative to the imposition of fees and charges. It must be noted, again, like I said, Mr. President, that the bank is not seeking the power to set fees for financial institutions. The bank is not seeking to set fees, Mr. President, for commercial banking institutions. But these amendments, Mr. President, again, are allowing the central bank to ensure that there is a level of transparency for the public, Mr. President. It is seeking to ensure that the actions of the banks can be justified, Mr. President. It is seeking to ensure that we maintain financial inclusion, Mr. President, by not having a banking system that is able to run away, Mr. President, from ensuring that those perhaps we may consider perhaps I would say, I would put myself in that category of having the least amount of money to put within the banking sector, can be able to maintain the accounts and maintain in good financial standing. With those few words, Mr. President, I commend this bill, and I ask that this bill be read a second time.
Thank you very much, Senator Dr. Shantal Munro-Knight. Senator Watson.
Good morning. Thank you, Mr. President. Mr. President, the recommended legislation that we are currently considering, proposed, is not controversial, I don't think. I think we all recognize the need to regulate these institutions, financial institutions. In particular, we're talking about banks today. Well, we focused on banks, I should say. And it is necessary that we regulate the relationship between those entities and the people who do business with them, whether they are individual customers or they are business customers. And so there's no controversy there. The legislation, as I see it, and as Senator Munro-Knight said, it may appear to be small because it is short, but they're profound amendments, and we take note of that. It gives clarity and legislative power to the central bank as a regulator of that sector. Mr. President, I took a look at the current bill, the Financial Institutions Amendment Bill, and also took a look at the Principal Act, the Financial Institutions Act, Cap 324A, to see where where the bill lines up with that legislation. And I just wish to draw attention to some of the things that I think ought to be considered in passing this legislation. Now, Section 43(3) in the Principal Act requires that a trust company or finance company or merchant bank also must respond to an inquiry from the central bank in relation to charges that they may charge to the consumer or anyone that they're doing business with. And when I look at the amendment of that section, which replaces the original Section 43, what I notice is that that section is missing. I do not understand why that section is missing because I think it is commendable. Perhaps it is addressed elsewhere. And if it is not, I would simply recommend that a further amendment will be necessary to address the issue of fees and charges from those other financial market players, whether the jurisdiction is placed with the central bank or the jurisdiction is placed with the Financial Services Commission. But to remove that provision, I believe, is an error. Mr. President, the central bank is making a foray into, and a definitive foray into, the area of consumer protection. Now, for some time, there has been a question as to who has that responsibility, which regulatory agency. We have the Fair Trading Commission, Financial Services Commission, Central Bank of Barbados, Office of Public Counsel. Who would a bank customer turn to? And in particular, we have to be concerned about individuals and small business players because they don't have the power to battle with the banks. I don't think that that is in dispute. And so we need a regulator that will step in. It has not been clear, and regulators should not be butting heads. So I would recommend that there is a comprehensive review of the consumer protection policy as it relates to doing banking business in this country. I think it is overdue, it is critical, and it lines up with what the Barbados government, regardless of the administration, has done in relation to protecting consumers in this country. I must say that a lot of work was done by a previous administration, of which you were a part, Mr. President, on the consumer protection arena, but there was that lacuna as far as banking relationships are concerned. And I think that we run the risk of taking a piecemeal approach that leaves everybody confused. And I would suggest that it is time, particularly considering the regulatory activity of those international regulators and the kind of requirements that are being placed on people doing banking business to provide information, etc., that those relationships are observed, analyzed, and that a comprehensive consumer protection regimen be put in place. Mr. President, I also want to address an issue that has become all the more prevalent in recent times and is prominent at this moment, and that is the issue of data breaches for consumers. Even now, as we speak, there is, I can say it because it has occurred to people that I know and to me, a data breach that seems to be quite profound occurring with a banking institution in this country. The problem that we have is that we get no notification. Now, that is problematic for many reasons, but in particular, it also does not line up with the data protection law that was put in place in this country recently. We therefore need to have a regulator who will say to the banks, whether by guidelines or by regulations or by an act, these are the responsibilities that you have when a data breach occurs in your bank. Your responsibility to notify, to correct the situation, to compensate even, because consumers cannot be left to flounder and to fight with the bank to get information and to get a solution when that kind of situation occurs. I feel very strongly about this, not just because I find myself affected at this moment, but it happens regularly, and we know with technology and the opportunity to hack, in some instances it's a very simple process, or in some other instances it is something that is done over a long period of time. Vulnerable banking customers must be able to do their business, assume that their information will be protected, and in that respect, Mr. President, I must also say that a data breach for me might mean a data breach for an associate or a relative, because know your customer information that's required now to set up an account, will sometimes ask you, and certainly for all of us as pets, it will ask our relatives about us, and it may ask us about our relatives. Therefore, that data, if taken from the bank, can be utilized for other nefarious purposes, and that has to be addressed. We cannot leave that lacuna remaining in our system. Mr. President, I also want to raise the issue of what is a fee or a charge. Now, I want to commend the central bank for its recent activity in relation to fees that were set by the banks, obviously without any reference to its consumers. But we all felt that it was high time that that matter was addressed. But I don't understand when I read this bill what fee or charge means. I looked around, I will do that. And the reference that I can find to fees in the body of legislation that governs financial institutions is actually a fee regulation that addresses what the banks pay to the government, not what the consumers pay to the banks. I think it is important when we are regulating that the regulated and those who are being protected by the regulator understand what that regulatory effort is intended to result in. Is a fee just a fee that's charged for a transaction? Is it a fee that's embedded in another fee? Is a charge an interest charge? And we need to understand what we mean when we say that, so that the banks know what they can expect and consumers know what they can complain about, actually, when they think that something untoward has been done to them in relation to fees and charges. That's really important. I am a devotee of ex-ante regulation. Set the rules, make them clear. and then punish when ex post regulation, punish when those rules are breached. But it is very important for economic actors to understand the rule so that they can do their day-to-day business, operate within their environment and be sure-footed. It is very important, therefore, given that there doesn't appear to be a definition anywhere else in the legislation that governs financial institutions, that those terms are defined. Finally, Mr. Chairman, and I never intended to be long, I also want to draw your attention to the changes in, the other changes in Section 95. Section 95 essentially replaces an existing section, and it takes a section that was quite short and adds considerable detail. And, well, that's necessary. We're not going to quarrel about that. It sets out the rules in much the same way as we would expect them to be set out. But again, I think it is important that that issue relating to disclosure of the reasons for a fee and charge takes into account the other financial institutions that are not banks, so that people who are doing business with them, and we know in Barbados that we have had challenges with non-deposit taking institutions taking money for investment purposes, and obviously there will be fees and charges attached to those activities. And people who are doing business, if we're encouraging investment, we need to understand what those fees and charges will be, whether they're reasonable. And I would suggest that given this particular move, there may be a need for the central bank or another financial regulator, or all of them together, to sit down and look more comprehensively at this issue and pull all of these regulatory statutes together, do some reform, and give us a body of law that we know that we can rely on. The regulators mustn't have to butt heads. We should know which regulator is responsible for what. I think there's probably a little confusion in the market in relation to that as well. What is central bank responsible for versus what the Financial Services Commission will be responsible for as it relates to consumer protection. That's an area that requires clarity, and I would recommend that that work be commenced sooner rather than later. Mr. Chairman, those are my primary concerns with the bill that is before us. As I said, it is not controversial, it is timely, it is necessary, but more comprehensive work needs to be done in the view of the opposition. I'm obliged, Mr. President.
Thank you very much, Senator Watson. Senator Mallalieu.
Thank you, Mr. President. Unusual for me to follow the speech of an opposition senator and to disagree where my honourable senator has agreed. Mr. President, I listened very carefully to the honourable senator in the presentation of this bill. I heard, number one, that this is to strengthen the ability of the central bank to give direction to commercial banks. I heard a lot about the arbitrary method that the banks impose fees, which seemed to me to be very much a conclusion as opposed to an investigation. I heard about the excess liquidity that exists in the banking system, which is for sure there. And I heard about the fees and commissions. In fact, some statistics, Mr. President, were given, which I would like to perhaps offer some clarity on based upon my own research. It is in fact true, I can say that from the central bank report, that they did report that 31% of the income of the commercial banks was coming from fees and commissions. But it would be an incomplete statement if we were not to identify that 50% of the 31% of fees and commissions comes from foreign exchange fees and commissions. So in fact, it would be disingenuous of us to, or I shouldn't say that. It would be, I would just like to clarify that the 31% is in fact fees and commissions. However, only 15% in totality comes from transaction fees, sir. That's the information coming before me. So let me get, Mr. President, to my material points that I would like to make about this particular bill. For me, this bill seems unnecessary. For me to understand that, where was the starting point for me in this? I asked myself, what do I see as the role of the central bank? And my starting position was, before I asked some questions and inquired as we do, that the role of the central bank was to provide a safe banking environment to us. We were interested in strong, well-capitalized banks. We do not want to lose money. We want to make sure that the central bank is regulating these banks who are offering these services to us, and let's make sure that they're well capitalized, that they can facilitate the transactions, they can help us to grow the economy. That was the role of the central bank. So my next inquiry, as I went a little further, is I went to the information about the central bank on the central bank's website, sir. And I found that very succinct statement at the beginning where it says really two things, and I hadn't thought of one of these, to be quite honest, Mr. President. Number one thing, role of the central bank is to maintain the value of our currency. I hadn't thought of that, and I thought, yeah, I'm with them. That's very important to me too. And secondly, it said promote financial stability, orderly and sustained development, which was kind of what I had learned in my own research and what I thought with my limited education in this area. I then went a little bit further and said, globally, what do we see as central banks? And globally, central banks are known to provide banking and financial services for government themselves, and then for the commercial banking sector. And that's more or less where it stops at that level. But when I read this bill before us, this feels more to me, as my learned colleague here had said, like a consumer protection bill. This doesn't feel like a regulation or the things that I talked about, which was a central bank. And then I asked myself, well, what is the need for that then? And you know, Mr. President, I speak on this regularly, and I will continue to. There are 6 banks in Barbados, and they compete for our business. You know it, because we all participate in that. We have choices within the market. They compete for our business, whether it be a mortgage, whether it be a credit card. They compete regularly for our business. There is ample free competition amongst these banks. Now, I think it is potentially true that when you have a small market of potential service providers, that you need to keep an eye on them. And I think that's a role for the central bank. But I do think that in and amongst themselves, they compete and they set fees that the market would like. So the press release that was issued on the 3rd of January 2024, which I read on the central bank site, and if I paraphrase it, sir, that was a directive not to impose fees on electronic transfers through the automated clearinghouse, ACH. That's what it said. A directive was issued on January 3rd to the banks, telling them that they could not do that. It's interesting to note that at that time, there was already a bank that had been for the last year charging such a fee. That bank, who that directive, what seems to have stimulated that directive, was only a new entry to the market. That had already been charged for a year prior by someone else. So I don't quite understand why they had to step into this. What really should they be focusing on, sir? And this is where I will agree with the senator who led this off. There is a lack of opportunities in the market. The consumer who maybe we should think about a little bit here is that person who has saved for their retirement or is saving to buy their first car or home or whatever it is they might be doing. At this point in time, putting the money in the bank at, I heard 0.2%. Quite often I hear 0%, to be quite honest. There's nothing at all you get for it. And you might even be charged for leaving the money there, because that's the nature of the banking system today. Every day they're further from their goal, sir, because the inflation in Barbados is running higher than that. I don't know exactly what the number is. I've heard 6 or 7%. I think that would be a reasonable number coming out of COVID. It probably is there. Globally, it's even higher than that. So to make matters simple, if you have your money in your bank and you're earning 0.2% and inflation is 6 or 7%, you are losing money every day. You are further and further away from reaching your goal. So for me, if I was a central banker and if I had things to focus on, I might focus on that. So why is that so? We have a unique situation in Barbados today, sir, where we are not a first world economy, but we have the lowest borrowing rate ever in Barbados. It's somewhere around 3.5%. If you go to borrow money today on a mortgage or something, you will get somewhere between 3.5% and 4.5%, depending on the individual customer relationship, what it is that you're doing. It is historically the lowest rate we could ever borrow money on. But we are not a first world economy. First world economies, like the United States of America today, are at a 5% rate. That's an anomaly. And where does that come from, sir? Why is that important to the conversation I'm having here today? It's important because the banks make money on the spread when they lend money out. They have to rent money from those who deposit and pay them an interest rate, and then they rent it out to the other person. And the difference between the two is their margin. In very simple terms, if you're a shopkeeper, sir, and you buy the bank's beer for $1 and you sell it for $1.50, you have a 50-cent spread in there, and you make money there. The banks are no different. Their commodity is cash. They take money from those who have and lend to those who don't. And they make a margin on the two. But as it stands today, these are some other statistics that can be found in the central bank report, I think, in my search online. The Barbados economy over the last 10 years grew from 4.8 billion to 5.6 billion is the number in there. I don't think the overall number is what matters because I'm not actually sure if it was US or Barbados dollars. That's US dollars. And the annual rate of change for 4 years of the last 10 years, it has actually improved. But 6 of the last 10, and we know those are some COVID years and they also span back to some other years. 6 of those years, it was in decline. So actually, in real terms, in the last 10 years, I think we all more or less feel it, the economy is more or less flat. It's been growing the last couple of years in post-COVID extremely well, but looking at the 10-year period. However, Mr. President, it might come as a surprise to you to learn that the money supply, the amount of money in circulation in Barbados has increased over that period by 34%. 34%. Some of that comes as a result of borrowing. Some of it comes as a result of printing money. In the first few years of that 10 years, there was printing money. In the last few years of that 10 years, there has been US dollar borrowing, which you then have to replace with some Barbados dollars. So I say all of this to you to say that that is what has created this liquidity crisis. And it's a heck of a thing when you have a liquidity crisis where you have more money to lend than you have projects to lend it to. The loan portfolio of the banks during that period has in fact grown, but it has grown, sir, at a much lower rate than the savings portfolio. More people have deposited money than they've been able to lend out. And that is a concern to me, and it's a concern that I really would like to encourage the central bank to look at and see how we can change that. How can we encourage the banking sector to lend more? So I'll agree with you, Senator, that we need to find ways where we can lend more. And I think the central bank needs to be looking at that. But this amendment really and truly deals with the central bank getting involved in the consumer business, which is what I said at the outset is unnecessary. And let me now explain why I think it is unnecessary, sir. Sir, in 2021, we passed a bill, or this Honourable Chamber, before I was a member, passed a bill called the National Payment System, which was referred to earlier by other senators. And in that, in section 2 of it, I have it highlighted here for myself to remember, it does in fact describe an electronic fund transfer to which fees might be charged. And it includes point of sale, automatic tellers, transfers, internet, a whole variety of them. I'm sure everyone can read it. And further in this bill, in part 2, section 4, it goes on to say, the central bank shall consider the interests of consumers. Seems very reasonable to me. So it does, in fact, put it into the realm of a consumer protection agency. And then it goes on in section 7, sir, to solidify that by establishing a National Payment System Council. And that Payment System Council, it says, and I'll quote from it, sir, section 7.1, there is established a National Payment System Council which shall, A, advise the central bank, and in point 3 of that, the setting of fees. So we have a piece of law right here, passed in 2021, that says this. We came back now in 2023, when I was a member, on the 25th of October 2023, and we did a very good thing, in my opinion. Well done by all involved. And we came back to look at that particular council. And we did the National Payment System Council schedule, and we appointed members. And sir, I will quote for you, it says, the council shall comprise 10 members. Remember, these are to advise the central bank on the imposition of fees. 5 persons nominated by the minister. And then it says who those 5 people should be. Nominated by the minister in paragraph 2, experience in business, finance, economics, law, broadly representing diversity of, let's make sure we get some consumers out there. 2 members recommended by the central bank. Let's make sure the central bank has a voice on this. 1 member from the Financial Services Commission, again, recognizing that they have an interest in this. 1 member from the cooperative credit unions. Let's make sure they're involved as well. All of these are good things. 1 member of the Association of Barbados Bankers Association. So this council was created here, passed on the 25th of October 2023. So sir, I guess that comes to my questions before I conclude. If we have this existing legislation, which sets out a framework for us where the central bank will have a council, will consult with all of these people, we come back here and the legislation in November of last year, and we pass the council and we say who the members are, and those powers and that whole body exists there, how come we are here today to pass a law that bypasses all of this, it would seem, and just simply say, because I want to be clear, it's very difficult, you know, Mr. President, I've said this before, to actually, for a layman like me in business, not being a lawyer, trying to understand some of this because it's not all in one place. So we're amending Cap 324A, which has been amended a couple of times before, but I don't actually have one document, sir, with all of the amendments, so I have to piece it back together. I hope we will. I know we have some other bills before us which we may address that. But Section 115 of Cap 324A has previously been amended so that it now reads, the central bank may make regulations, and now the change proposed today says, in respect of the imposition of fees and charges. Now I accept, and I heard the Honourable Senator say that it is not intended for the central bank to set fees. Well, I'm sorry, sir, but I can have no other reading of this bill when it says the central bank, if passed, the central bank may make regulations in respect of the imposition of fees and charges. Clearly, that is the intention. So, sir, in my conclusion, I would like to ask a couple of questions. I would like to ask, what is the status with the, what was it called now? National Payments System Council. Has the members been appointed? Did that council advise to the Governor of the Central Bank prior to the memo being issued on the 3rd of January? Has all of this happened? Is this in fact necessary? At the end of the day, I understand the intent, but I get very concerned, as you know, sir, I've said many times, is, are we just passing another law that is unnecessary because we have previous laws that address this? So I'm sure the other side will point me where I've gone wrong, but I personally don't see and feel that there's a big bad banking sector out there. I see that they have a difficult situation with a lot of people putting money in the bank, earning very little interest because there's so little opportunity for that money to be lent out on the other side. I hope that we can find ways together to stimulate the economy such that we can get more lending done, such that the spread, which may need to be 3.5%, 4%, could move upwards so that the savers can at least get an interest rate that is somewhere close to the inflation rate so that they could maintain their money and not be losing money every day. So those are the things from a central bank point of view that if I was to come here today and tell you what the priority would be, I would be looking at those things. I would not be asking the banks and to question them on their fees and talking about them being arbitrary. They compete in the market. If you don't like the fees from Bank A, go to Bank B. We all do it. We all do it. We don't like the mortgage offer that you get. You don't like what those fees are. And then when we do criticize them, sir, I just think we need to be fair and recognize these banks. You may see them as big business, but they're not. They're made up of a lot of small individuals who are putting money in there and earning no interest on that money, sir. We need to find a way to protect them. And if you have electronic banking and you have all these other things that you're talking about, there has to be some reasonable level of fee. And sir, with those words about this, I like the first act that we passed. I think that that bit of law in Barbados is a good piece of law. I think the consumers are well protected. And unfortunately, I feel that the one today is unnecessary. I'm obliged to you, sir.
Thank you very much, Senator Mallalieu. Speakers? Her Honour Senator Thompson.
Mr. President, I think that I should start at the point at which the Honourable Senator just ended, because it is such an inviting entree, I cannot leave it. Capitalists never see the need for regulation. You get a sense that left on its own, big business would act as a benign intervener, regulated only by competition, and that all would be well in the world if left alone, and that there is no need for government or any other regulation because the capitalists somehow, driven by competition, will see that the poorest, that the lowest, that the dispossessed are put right. But that is not the experience of capitalist systems. Capitalism exists for those who are the owners of capital, and there are not a lot of small people putting money in the banks. They don't make the profits. When I put my small deposit in, and my deposits are small, when I put my small deposits in, and I get less than 1% interest, and the bank takes that up and lends it to a person who is borrowing money at a much larger interest rate, even if it is only 3%. Because look, and you say that this is a low rate and it may be relatively, but if I am getting less than 1% on my $5,000 deposit, and somebody is paying 3% on a mortgage, which constitutes a significant percentage of banking loans, on a mortgage of $350,000, which is an average price for a house. What is 3% of that? So when we throw out these percentages as if there are not daggers juking into people's sides, we really have to understand that we are coming from two different perspectives here. So that this notion that this is an unnecessary intervention in the marketplace because the poor banks are not profitable or because the poor banks are already competing and doing the best that they can in all the circumstances really has to be seen for which it is. A perspective.
I want your rights.
Mr. President, I rise because I think that it might be, I think I need to elucidate on this matter. I seem to be implied that I have said that the banks were unprofitable and poor banks. I never said any such thing, Mr. President.
Thank you, Senator Mallalieu. I don't recall you saying that directly as well. Continue, Senator Thompson.
The assertion that the bank is not a big capitalist structure, but a lot of little small people, is a suggestion that the banks somehow are an impoverished lot, not making substantial profits. And I wish to disabuse anybody who wants to carry that argument of it having any relevance to the average person who walks into banks in Barbados. Now, I am one of those people, sir, one of the few people left who actually physically goes to the bank in Barbados. I do not do online banking. And it is not because I'm afraid that the money is going to disappear into some cyber hole. It is not because I have challenges with the technology, even though I do, sir, but not with doing it. When I lived in the United States, I did my banking online. In Barbados, I go into the banks because it allows me the opportunity to see and hear the average Barbadian, to see and hear what they face. People will talk to me about challenges of all different types. I see, for instance, the little old ladies who stand up in banks in Barbados for half hour and more because the banks only have 1 or 2 tellers at the wicket. And the lines are snaking around the banks, particularly at the end of the week and at the end of the month. And the bank is charging you from the time you step through the door. If you keep money on your account, you are charged for that. If you go to the ATM to withdraw it, you are charged for that. If you come in to withdraw it in person, you are charged for that. The banks in Barbados are not just liquid, they are highly profitable. And it is not a matter of liquidity coming into the bank because they cannot unlend it. The problem with the banking system in Barbados is that we now have a banking sector that is owned entirely, whether it is by Trinidad or people outside of Trinidad, and people working in the banks, a lot of baby-faced young people, whom you encounter if you go to borrow money, who no longer practice banking in the way that they did 20 years ago, for instance, or 30 years ago when I came into practice. When a banker would tell you, I am going to help you, And a banker would give you a chance and repose some degree of confidence in you as a young business person or a young professional. What happens now is you go into the bank, they ask you for everything from your birth certificate, your marriage certificate, every possible, every single bill you have, because you have to have proof of address. You have to have all kinds of information to satisfy, according to them, externally imposed Know Your Customer and other regulations. When if you go into a bank in the United States, you can set up an account in an hour and walk out. In Barbados, where you are born, you cannot set up an account in any short time without being asked your whole personal history. And if you are a PEP or a politically exposed person, forget it. The grueling. I once went into a bank to deposit a sum that was less than my salary. They asked me where the money came from. I said, but you know that as a minister, I was a minister at the time, my salary is more than this. Why are you asking this question? Well, it is a sum that you have to say where you got the money from and so on, and you have to fill out a form. I told them, bring the form. And when they said source of funds, I wrote on the form, sale of prophylactics. In other words, sale of condoms. You come and investigate that then. Well, the supervisor looked at me, and I stood at the counter and smiled. And what could the supervisor do? Because it was not unreasonable for me at the time, as a minister, to come in and make a deposit, not gotten from any ill-gotten gains, but out of my salary. So that when you go into the banks, and I was making the point earlier, that previously when you faced a banker across the table, if you went for loans, they dealt with you in a more personal way. Today, they are driven entirely by ratios and numbers. And they do the numbers, and they tell you, really sorry, because if you fall short of their ratio by $5 or $10, they tell you they're not giving you the loan, that you are not a good prospect. And that is the problem in the banking system, that it is driven, numbers driven, by these formulae that are not intended to support development, that are not really intended to help the customer, but are intended only to sustain profit margins. And that is why all through COVID, all through contractions in the economy, the banks remain highly profitable based on the fact that they are risk averse, highly conservative, and charge fees on every single transaction. When you go for a mortgage, for instance, you will pay that mortgage for 10, 15, 20, 25 years. You don't get any ease on fees because you still have to pay the bank negotiating fees. Now, they're there to give a loan, but you are paying them still to negotiate the loan with you. And then you have to pay bridging loans. And very often, and these things are not explained to the customer. So very often, people who go for mortgages are shocked at the level of fees that they have to pay. And in fact, the differential between what they borrow and what they get in their hands. And then you have to pay the bank's lawyers. In addition to the negotiating fee that you pay the bank itself, you have to pay the bank's lawyers, you have to pay your own lawyers. So this idea that the banks somehow are not doing well is inaccurate. I won't say it is a falsehood because I don't want to impute improper motives. I'm simply saying that we are coming from different perspectives. So that this intervention was necessary in order to ensure that rates are not at a level that constitute an unfair figure and an unfair transaction fee for the customer. And somebody has to protect the customer. Somebody has to protect the average consumer. You see, because the experience of those who are big businessmen is not the experience of the average black person who walks into a bank in Barbados. Male or female, middle class or working class, the experiences are different. And they are different because one person walks in with a greater capital base, and when the bank teller or the bank officer looks at the amount of knots on your bank account, they're smiling because they know that is profit for them. Whereas the other person who needs the leg up and the opportunity does not necessarily get it, because they are perceived as a too high risk. People with great business ideas, people who have worked hard but only have small amounts of money, who just need opportunity. And you know what makes it deeply troubling to me? That Barbados has one of the lowest default rates on loans anywhere in the entire Caribbean. The lowest default rate. The average, particularly on mortgages, the average Barbadian, when they get a loan, will fight to pay it back, will fight to hold on to their property, will eat air cakes and suck salt if they have to pay the bank on their mortgage. And yet, opportunity is not readily available to them in the banking system. I feel very strongly about this because I know what it is to be a single professional woman. I know what it is to be a married professional woman and to have capital and to have assets that are unencumbered and have a bank in Barbados tell me I'm not going to lend you any money, and I don't. And I am one of these people who pays my bills. So I feel very strongly about this. And I know that the experience of people who look like me is not the experience of some of my other colleagues. So that when we start on that premise, sir, we fail to understand and appreciate why it is central bank has to intervene. Central bank is not only there to guide monetary policy. Central bank is not only there to regulate the macro framework. Because when you are talking about banking, you are not talking about systems and rules. You are talking about the access to capital that makes the difference in a person's life, that makes the difference in their building their dream. Whether it is getting a car, whether it is building a house and getting a mortgage, whether it is putting in place a business idea, our banking system should be helping to fund the Barbadian versions of the man who owns Tesla, and the people who own Bezos and that crowd. But ours, our people, our creatives, our self-employed people, our designers and our engineers, and our first movers with new ideas and initiatives cannot get access to capital. I know what it is because I come out of a family where my father started a business, and because he was a small black guy without any experience in laundering and was starting a laundry business in Barbados, thank God it has survived and is nearly 60 years old, was told that the banks would not lend him any money. He was an uneducated, without any experience in the field. And although he had saved and bought machinery on his own that they could have held, they said that, these were depreciating assets and nobody knew how the business was going to do. Dad could not get capital. And we must do in the black sector in Barbados what we don't do, but what happens in other ethnic communities in Barbados. We have to start to help each other. and pool our resources and make investments. We have to stop distrusting and mistrusting each other. And if we are able to do that, then the kinds of investments that the bank tell us we cannot make, and they're not going to support us to make, we would be able to make them, and without having to pay the banks a cent. There is a lot of distrust amongst the public of the banking system. People feel when you go with ideas that they're shared with others. People feel that the instant your mortgage is late, that people have friends or family lining up to get it. There are all kinds of things that need investigation and that need regulation and oversight. That is the role of government. That is the role of central bank, to protect, to promote, and to ensure prosperity. And that is what this intervention is about. You cannot just be taking from your customers all the time. So in a situation where they have no control, and it makes no sense to say go. If you don't like what Bank A is telling you, go to Bank B, because Bank B got the same rules and the same fees and the same charges or more. A lot of people don't know because, and this is a problem with financial literacy, and therefore it was important that government started some of the financial literacy classes, which it did, that they can negotiate and maybe shave off a percentage or 0.5%, or if the market conditions change, that they can renegotiate a mortgage. The bank doesn't tell them. Nobody tells them. One of the things that we can do, that we don't, is when we are selling property, if we can afford, hold the mortgage on it yourself. We don't do that. But that is another speech for another day. What we are having, or what we have had develop, is a banking sector, and I admit, people are in business to make money. So I don't have any problem with the banks making money. My concern is that if the purpose of the bank is to help to promote prosperity, help to grow and build societies, help to develop and the opportunities for people by giving access to capital, then they have to give access. The risk aversion has to be stymied or reined in so that greater numbers of people have access to opportunities. So that people who come in looking for guidance can actually get advice and guidance. They can actually feel as if they're having a conversation and being treated with dignity. Generally, I would have to say that I find that people at the banks are not impolite to me. That does not mean I've had easy experiences with banks in Barbados. That does not mean that I do not see the challenges that other people encounter. Sometimes it is not when a person goes into the bank that they don't necessarily have a good argument for whatever it is they want. What they lack sometimes is the skills to advocate for themselves. The skills to advocate for themselves. And that, while that cannot be the subject of regulation, it can be the subject of education based on financial literacy and what the government can help to put in place to make life easier for the average citizen. We went through a period when the central bank was printing money, driving inflation in consequence, and putting the country at risk. We are now in a situation where the central bank is seeking to regulate, to ensure that there is a broader base of people with access to capital or who are not prejudiced by continuous and high fees on every single over-the-counter or electronic transaction. When I talk about risk aversion in the banking system, sir, I am 62 years old. It is very difficult at my age for me to get a loan from a bank in Barbados because I am heading toward retirement. In the United States, however, you could borrow money up to nearly when you are 80 or beyond, as long as you can show that you are borrowing on an asset from which the bank can recoup money. I believe that only one bank in Barbados really gives loans or mortgages to seniors here. That is something that needs to be addressed. Very often, senior people have paid off their mortgage, or maybe at a certain stage in their mortgage. Some are in retirement. They may want access to capital, but our banks do not offer reverse mortgages. They don't give opportunity through that way. And as I said, if you are senior, I mean, young people don't necessarily recognize these challenges or see them as challenges, because until you start aging yourself, until you start looking down the road at retirement and asking questions about what you're going to do with your life, what is your quality of life going to be like, what access to capital do you have in a market where there is inflation and price rising because of a lot of external push factors over which you and government have no control, but which affect every aspect of your daily life. You don't start to think about these things. So a lot of younger people do not think, for instance, about pension plans until they start to get older or realize that retirement is coming, or that they're not going to be working anymore for one reason or another. So our banking system has to look at, like I said, reverse mortgages, other products, products for older people, products that expand their current offerings and get rid of some of the excess liquidity in the banking system that is just sitting there. It cannot only be about buying cars or consumer durables or carnivals or fetes or costumes. Some people are paying for their crop over costumes from one year to the next. They have to be able to give loans that allow for development, for growth, and for opportunity that allows for upper social mobility. It cannot just be about quick money and having a good time, and you want all the money to buy all your crop over tickets and all your crop over outfits and your hair, your nails, and your costumes. Everything that goes with it, the makeup artists, and oh gosh, I forgot the thing that you do with your legs so it hides all the cellulite. I would like to have that every day. But this is big business, and the banks have tapped into it. And I don't have any quarrel with that. If people want to have a good time and that's how they want to spend their money, I can't afford to spend money like that. But beyond funding that kind of activity, beyond supporting affect society and affect mentality, where is the capital to fuel the growth in the society? Where is the capital to fuel the growth in the economy? Where is the capital to open the doors of opportunity to those who have not traditionally had access to wealth and capital? So that we are building a larger middle class. So that we are building opportunities for persons who would then be able to pass wealth to the next generation. That too is the role of a banking system, in my view. And they can do that and still make money and still make profits based on what we are seeing as the level of liquidity in the banking system, based on what we know is the very low default rate of Barbadians on loans, based on what we know is the attitude of Barbadians toward looking after their money and being good stewards of what they are given in terms of capital and financial resources. The evolution of the banking system continues, and the structure of the banking system has changed. What we need in the banking system is a higher degree of sensitivity about how banks can align their profit-making activities with the development activities and the development vision for countries. So that if, for instance, the shift is toward artificial intelligence, how many banks are going to be willing to fund some novel business which is promoting the use of artificial intelligence? How many banks are willing to make entrees into supporting persons who are entrepreneurs and small business owners? Very often when you go into the bank or when you talk to people, they tell you how difficult it is to get capital out of the banking system for small business purposes. At the international level, sir, we know of the changes in relation to the correspondent banking structures and the impact on trade and business within our markets. I don't have time, sir, to speak to that, but I don't have time to speak to that today, but with estimates coming, perhaps there will be opportunities for us to explore some of these ideas in a broader structure and in a different setting. I am pleased to support this measure because I think it is an appropriate exercise of the functions and role of the Central Bank of Barbados. But moreover, by protecting the citizen and the small man and business people, especially those who are likely to feel the charges, because sometimes, depending on the nature of the business, they cannot pass the fees on. They have to absorb them, so it impacts profit margins. It reminds me, sir, of the work that this administration had, the Barbados Labour Party, has always done. The intervention in the marketplace on the side of the small individual. And it reminds me, sir, if you think about the banking system, you on the other hand have to consider what is happening in the context of credit unions. And we should remember that it was a previous Barbados Labour Party administration led by Tom Adams that gave impetus and growth and strength to the credit union movement in this country. So when it comes, sir, to the matter of standing on the right side of the average person and the poor black man and the small black man, you have to support this measure, and you have to support the work of the Barbados Labour Party government.
Thank you, Your Honor, Senator Thompson. And the speakers, Senator Reverend Morris.
Mr. President, thank you very much. I must commend Senator Mallalieu for clearing up one thing, or one myth that has been brewing in this country and going on for a long time. And that is, in fact, sir, there's this concept that the Barbados Labour Party is an elitist party and it supports big business. Senator Mallalieu has put that to rest this morning. Because what we have before us is a matter for ordinary Barbadians. I was wondering, sir, the starting point for me, and I answered the question, why regulation? And my thesis is, sir, that we need regulation, in my view, because the market itself lacks morals. That is my view. Because too many of our financial institutions are taking advantage of the poor people in this country. And I'm using the term market in its broadest sense as we do in history. So that my contention is that the market is lacking morals. And when an economic entity lacks morals, it also spills over into other disciplines. And for this whole week, we have seen the impact of the market itself, in fact, impacting political institutions. And so, sir, I've heard so much about integrity all this week. I've heard much about honesty. I've heard much about humility. And I want to place all of that into context of what I'm saying. The attitude and behavior of the banks and some financial institutions have generated a lot of ire and frustration at the most visceral level. We know about justice. We all long for justice in the marketplace. But there is a spate of individualism that is driving the market. The question is always, what is in it for me? And therefore, a lot of policies in these institutions are guided by that principle. And if we reject the traditional claims of morality, we cannot expect them to exist in the economic activity. Our market system, according to one author, has replaced the we with the I. And therefore, it is greed that is having a negative impact on financial institutions. And by that policy, what we are saying is that even involved in capitalism is the inherent characteristics of disparities. It seems as though capitalism must thrive on disparities. And we see that those disparities based on race, based on social society, and based on almost our everyday actions. I am saying to you, sir, that the experience of everyday Barbadians does not tie in with other persons. But let me say to you that I went to a bank, sir. I went to a supermarket and there were persons there collecting money on behalf of the Cancer Society. I hold that society dear to my heart. And I went to the bank next door to withdraw $20 to make a donation, and I had to pay $15 on that $20, sir. That cannot be economic justice in any society. None whatsoever. I want to go a little further. I know a gentleman, sir. And when they say lacks morality, this is what I'm talking about. I know a gentleman, sir, who was suffering with a non-communicable disease. And because he was paying, and in fact, he was paying his mortgage, and because he had to receive medical treatment, he lapsed in his mortgage. And according to him, obviously, he wants to live. And according to him, he received a call from Trinidad a few months later, telling him that he had lapsed on his mortgage. And that gentleman, sir, explained to the caller from Trinidad what had happened. And he asked the gentleman, could you come up with $126,000 by tomorrow? He said no. And he went through a whole process again, and the gentleman gave him the same story. And he asked him again, can you come up with $126,000 by tomorrow? And the gentleman said no, and the man from Trinidad said, well, we have to put the house on the market. I'm saying to you, sir, that moral considerations must also act in these financial institutions. The financial market has generated more wealth, more real wealth, it's true. In some cases, eliminated poverty and liberated more human creativity than any other economic system. The problem, therefore, is not with the market, but the belief that the market and the financial market are all that we need. That is where we begin to take advantage of people. Sir, there's no guarantee that the financial markets, the financial institutions, and the economic systems will provide equity, responsibility, or integrity. There's no guarantee about that. None whatsoever. The financial market system cannot be relied upon to distribute rewards fairly. They cannot guarantee honesty. And when confronted with their flagrant self-interest, they combine the maximum of temptation with the maximum of opportunity. I want to quote from the film Wall Street. Michael Douglas extolled the virtues of greed and its role in driving progress and innovation in capitalist society. In that film, he said, the point is, ladies and gentlemen, that greed, for lack of a better word, is good. Greed is right. Greed works. Greed clarifies, cuts through, and captures the essence of the evolutionary spirit. Greed in all its forms, greed for life, greed for money, for love, for knowledge, has marked the upward surge of mankind. That is the moral maze in which we found ourselves in terms of the market. What we are having, sir, is that the scenario of one party is involved in risk-taking, but knows that should the decision turn out to be a bad one, someone else will have to pay the price. And this is what the institutions are doing. They're taking risks, and then they're asking someone else to pay the price. I believe, sir, that regulation is needed. And I also want to say that when we look at what goes on sometimes in boardrooms, collusions between senior executives and board members without thought of what is best for employees, communities, and the nations involved. This itself is only one example of a larger problem. The market, it seems, I may have said it before, is better at creating wealth than distributing it. An equitable distribution requires something other than self-interest. It needs the common good. And when we look at some of the terms that are used in the market itself, when we look at some of these terms like credit, from the Latin credo, I believe. I'm not going to quote French, sir, because they may get caught up between such words as choose and Charles and all that. Fiduciary. All of these have Latin derivatives. They speak to things like trust. And therefore, people must have trust in the market systems. And if they don't, then there could be a collapse of activities. I urge you, sir, and all members here, to examine our society carefully. And a lot of our people are not having trust in these institutions. Those of us who call for moral activity in some of these institutions are very often condemned as being judgmental. But let me also say that when people lose all sense of honor and shame, and there's nothing that they will do or not do if they can get away with it. I am saying that as long as people feel that they can do something and getting away with it, then regulation is necessary. People will make every attempt to outwit regulators. They do it in various ways, even in terms of building security. But in the meantime, people must be protected. Our people must be protected. And that is what this piece of legislation attempts to do, to protect ordinary Barbadians from the claws of financial institutions. Too many of our people are hurt. And therefore, sir, I beg to support this regulation. And I would beg all other members to support it. It is for the people of Barbados. Thank you, sir.
Thank you very much, Senator Reverend Morris. Senator Walters.
Thank you, sir. Mr. President, in an effort not to be repetitive, I will be brief. The average citizen, sir, has to earn his way. He has to work to earn an income to provide for his family. The government, sir, should be earning its way as well. Should be trying to grow the economy, grow a business so that they can have the resources to take care of the social needs of the country. An individual cannot borrow their way. A government cannot sustain borrowing to fulfill its commitments to the country. It is not even for financial institutions, sir, who should be earning their way. And when we hear all my colleagues are here, sir, talk about the amount of money that is in the system, the amount of opportunity that is lost because the banking system, the financial institutions, are withholding those funds and they're not putting it to work so that they can earn their way. So, as my colleague, Senator Watson, said, there is no contention here, sir. But I wish to draw your attention also to the fact that it is easily identifiable to say that there's a new charge, or there's a new fee, or there's an additional charge or additional fee, sir. But we also have to consider that there could be a change in behavior, sir, that actually costs the consumer. And I say that from the perspective of small business especially, sir, where I am aware that financial institutions are moving away from traditional practices and forcing their small business customers to have to conform in a new direction, sir. And if I elaborate, sir, at a financial institution where a small business person could have gone and made a deposit over the counter or in a specific section of that institution, they've moved away from that, sir, and have mandated that you now use another service without consideration, sir, for the cost to the business or to that small business person. Without acknowledgement, sir, that although it may seem that there may be better things to do than to sit in a bank and do a deposit over the counter, without acknowledging that they do that because they need the money as soon as they walk out of the bank, sir. So when the bank is forcing its customers to do what it wants without understanding what they have to go through, then it is a cost to the customer. It might not be a direct charge, but it is a cost. Because I am aware that with this new system, sir, in this institution, that when you put your money into the new system, in the deposit system, sometimes you have to wait the whole day to get access to your resources, sir. And a small business does not have the liberty to access additional financial resources to do its business. But I raise this, sir, as an example of the close eye that the central bank has to keep as it relates to regulatory affairs of the bank or the financial institutions, and not only looking at a system where they are being notified of specific charges, whether new or increase in charges, sir. Additionally, I think there has to be some focus on a basic service level that these institutions should operate from or operate by. Because it is not fair, sir, as my fellow senator alluded to, having to wait in a line, not because of for 2 or 3 hours, a half of a day, not because that there are hundreds of people, sir, but because there are not enough resources within the system to deal with your customers, sir. I am sure, although I cannot prove it, and maybe somebody should undertake the study, that if you look at the amount of employees in the banking sector, sir, or the financial institution sector, over the last 5 years, you will see that there has been a great decline in the amount of persons, sir, that are working to serve us, the ordinary Barbadians. And while there's a move to technology, sir, there can't be a move away from traditional sources or services to new services without the new services being able to accommodate the demand of the customers, sir. And a good example of that is when they are charging you for over-the-counter transactions and directing you to the ATM. And by the time you put the money inside to the ATM, it spouts back out, sir. And don't matter how much times you try, sir, you cannot make that deposit. No, because it is, they got 5s, they got 2s, they can't go in the bank. They got 10s, they got 20s, but it's not taking the money, whether it is the new bills or the old bills, sir. Have a situation, sir, if you deposit the money and the ATM blanks out during that transaction, you have to wait sometimes 2 weeks to get access to that money through a process that gives you a headache. So I believe that the reach for the central bank is greater, sir, when it comes to regulation than just notification of fees, sir. And I think that is something that needs to be considered because it is affecting the consumers. The last point I'm making, sir, is that the new amendments are asking for the institutions to communicate in advance to the central bank their intentions. But let us not forget the relationship, sir, the relationship is really between the bank and its customer. And we need, as a chamber, sir, to consider how that is implicated into the legislation. And if there should be some transparency that the consumers are notified or aware of what the intention is. And then even after the approval process, sir, of the central bank with the intended changes, that the customer is granted some period of time to be notified so that they themselves can make determinations or if they will seek solace elsewhere or if they will accept to stay on with that particular institution, sir, as well. So, in closing, sir, I think the direction is one that will seek to serve the consumers of Barbados well. I think we need to broaden or consider broadening the scope as it relates to a shift from services and a move to the financial institutions to push consumers where they want them to go and not necessarily taking into consideration the cost to the consumer, whether it is a real charge or a cost of inconvenience or a cost, to, in the case of a small business, the cost of not having access to your money. With those few words, sir, thank you very much.
Thank you very much, Senator Walters. Senator Dr. Munro-Knight. Senator Nurse.
Thank you, Mr. President, and just a brief intervention on this particular bill. I just wanted to say that I did listen to Senator Mallalieu's contribution carefully, and I think that while some of the comments that he did have some merit in terms of whether or not this is absolutely necessary, I say that I support the bill, and I think that I'm happy to see it because any bills which brings and affords the regulator, in this case the central bank, to be able to have additional or more robust control and regulation of the banking system in Barbados, I support. I think one of the problems, though, for the local banking system, Mr. President, is that we are unfortunately in a situation where all of our banks, probably with the exception of one, I believe, but all of our banks are really, in fact, mere branches of their Canadian or Trinidad banks, which means that the local management has really very little authority to decide on such issues as fees and interest rates and approving loans and so on. Basically what happens is that you apply for a loan and you can't get an answer or you can't get a decision in a couple of days because the branch has to send it back up to north to Canada for them to look at it and approve it. or disapprove of it.
Yep.
And then it comes back and the bank tell you, well, sorry, we have to decline or whatever, as the case may be. And so sometimes I wonder if it is really because of that situation where we have had to suffer. We, and I'm talking about we as depositors and as customers of the bank, have had to suffer through bearing the imposition of all of these various fees and charges on our accounts. And I think Senator Thompson did make the point during her presentation that there was a time, I remember, the older managers, the managers in the Barclays and so on as there were then, seemed to have much more clout or much more power to be able to say, look, we will look at your account and we know you are a good customer or whatever, and give you some little ease in terms of some of these charges and interest rates and so on. I think what used to happen is that they had a limit, maybe $1 million or whatever, under which they could do their own approvals and negotiating and so on right here in Barbados. And I think there were really much better customer relationships way back then than there is now because of the structures and the systems in which, unfortunately, the banking system in Barbados now operates. And so I think perhaps the time has come, Mr. President, where we perhaps need to get back to looking at having a local bank, perhaps. I know the credit union some years ago had started exploring and discussing the possibility of establishing a local bank. I don't know what has happened. I don't know if that has died a natural death, if they're still talking about it or what. But I think that one of the things that is probably necessary if we are to be able to increase the level of control that we have on banks and how they charge is maybe to have that local bank which can give that local, which can give that competition to these other banks operating in the country. Mr. President, it is the other thing I want also to mention. It is really a hassle, to put it in that language, to have to deal with these banks these days. Now, I understand all of the issues with know your customer. I understand all the issues that the banks will tell you that they have to undergo in terms of making sure that they meet the regulatory requirements, etc. But it seems a real pain in the neck to be able to have to do business with these banks. And I am speaking at a personal level because within recent times, and Mr. President, you would probably be aware in some cases that because I am involved in a number of charitable organizations, for example. During COVID, for example, a lot of those organizations became inactive. After COVID in 2022, and they started to get busy again and so on, and they wanted to be able to access their banking systems. And they found that their accounts had all been allocated as dormant or inactive, as the case may be. And it was a challenge, and it continues to be a challenge to be able to reactivate those accounts. In fact, the whole system, the whole process of getting those accounts reactivated is like opening a new bank account. You go through all of the process of having to provide your proof of address and all of the information which they have already on their account. And it seems, and I don't know if that is so, but I suspect because I would be classified as a politically exposed person, that there's even more requests on me. I feel harassed. Yes. Honestly, Mr. President, I have, within the last 3-4 weeks, been trying to reactivate one of, these charities' accounts. And you're going and, they ask you to bring in all this documentation, you take it in, and then they come back and they say, well, but you are politically, but they didn't say you are a politically exposed person, but I can only assume that that was the reason why they said, look, we need another ID from you. So I had now to go and produce, in addition to my national insurance card, I also had to produce, I think it was a driver's license or my passport or something, but it needed 2 pieces now of ID, and and then I had to then fill out forms, even although it wasn't my account, I was just a signatory on the bank account. I had to give them all of my personal information in terms of, my pension income, my other income, I had to fill out all of those forms. Where is the, where is the source of funds? What is the source of funds, and so on. And I think that really and truly something had to happen to try and ease the method of doing business with the banks in these situations. Mr. President, I think that this legislation, I support it, as I said. I would have liked perhaps to see it a little more robust. For example, it doesn't say, while it does say under section 95(3), where the bank receives written notice in accordance with subsection 2, and that is where the banks have to provide certain information, it shall, within 90 days of receiving the notice, inform the licensee in writing whether it objects to the fee or charges to be imposed or varied, and shall issue a directive to the licensee stating any action that the licensee is required to take, if any, in relation to the proposed fees. Now, I don't know if that action means that they can give directives to say that fee is too high and we want you to, and you must reduce the fee. I get the impression that it wouldn't operate that way because I believe I've heard the governor of the central bank say, look, we are not going to get into fee setting and bank charges and so on. So I don't know that you'll actually see a situation where the central bank will come out and say, look, this fee is too high, and you have to look at it again and reduce it. But I would have liked to see maybe something a little more robust, where there's some scale, not scale of fees, but maybe something which says, look, you can't charge interest on credit card balances in excess of. I mean, right now, credit card interest rates vary between 22% to 27% and so on. I mean, and that is, and unfortunately, what happens is that most persons who allow their account to run their credit balances to keep going all the time. Don't ever end up in these situations making any inroads in reducing the principal. Effectively, what they end up doing on a monthly basis is paying off the interest rate. And that is as much as, they achieve. My advice, of course, to such consumers and people who use credit cards is really, you should be making the effort to make sure that when you receive your credit card statement at the end of the month, try and pay off the balance entirely. Pay off the balance entirely. That way you avoid paying interest. And that way you can still get the other benefits of using the credit card, like, you know, your loyalty points and so on, but you're not incurring any interest charges. So the cost of using a credit card in those situations is zero. But unfortunately, most customers who are using credit cards really end up not being able to afford to pay off that balance in full at the end of the month. And so they're always in this continuous spiral, just being able to pay the minimum amount that is required. So that is my advice to persons using credit cards. Try and avoid them as much as you can. But I think we have to recognize, we do have to recognize that because of all of the various regulations and so on which are imposed on banks, there is a cost. As to whether or not this cost, and we know this cost is recovered through fees and charges and so on, as to whether or not it is reasonable or unreasonable or not, that is where I would like to see the bank taking a much deeper interest and making sure that we are not out of line, or that a particular bank is not out of line with what the other banks in the system are doing. So it is not an easy or straightforward situation, but I think it is necessary to absolutely have a greater control and regulation over these fees, all these various fees. And I mean, I really, when I was doing research on this topic earlier in the week, it was amazing. It was amazing the number of fees and charges that you pay when you go to the bank. And if some of them were called out, so I wouldn't go through the list of all of them. But it is unfortunate that we have to have all of these fees, and I would really like to see the central bank in applying this new act, this new amendment, hopefully when it is approved later on. I would like them to see them really doing much more, putting in a greater effort and more work in this area to try to control these fees. I would just like to raise on one other issue, Mr. President. Now, this is not a fee that is charged by the bank itself, but nevertheless, as a customer, you have to pay. And this is, I refer to the foreign exchange fee, Mr. President. So I'm not blaming the banks, because that money goes to the government. But the point is that it is a 2% on your transactions when you have to purchase foreign exchange. And of course, it has implications for the overall cost of products which are brought into Barbados and traded locally. And of course, it has implications for the number of people now who go online and do their shopping online overseas at all of the various places across the globe. So I would like to think that when the time has come, when government perhaps should take another look at it. The thing is that the foreign exchange fee was introduced at a time when there was real difficulty in foreign reserves, as we know back then. It was introduced by a previous administration, I think in 2016 or 2017, I think it was. And of course, it was, I would have thought that the idea was to try to reduce the demand for foreign, for use of foreign currencies, and also to put a damper on trading in these foreign currencies. We have heard from the government and from the governor of the central bank that since then, things have improved substantially in terms of our foreign reserve balances and so on, and that government's finances are in really good shape. And I would suggest that an opportunity now at this time could be taken to look at that fee and see if that it can be removed, and therefore also helping to reduce the cost or the price of goods that is now paid by consumers. And it's not my recommendation alone, but I've seen where the IMF itself has suggested that government should look at it and consider removing it. So I hope maybe we will hear something in the upcoming estimates of revenue and expenditure and the budget debate, that something good is going to happen in that area. But I leave that for the government. And so it is with those few words, Mr. President, I'm obliged to you.
Thank you very much, Senator Nurse. Senator Dr. Munro-Knight.
Thank you, Mr. President. And let me thank all of the honourable senators that stood on their feet, Mr. President, to speak to this amendment. Certainly, we've had a conversation that, again, has taken us to closely examine some broader issues of socioeconomic development and how all of the institutions that are part of this country contribute to that in the long run, the role that they play, how all of those different parts contribute to the achievement of certain objectives and ideals. And perhaps the question then of how do we kind of make sure that there is a clear consensus on what that looks like, because perhaps part of the question or part of the issue is that we don't have that consensus in terms of where we're going and the trajectory that we are at. I think, Mr. President, just in terms of reflecting as well, that the role of central banks is part of an ongoing conversation. It is evolving. There is quite a bit of literature that is speaking to that evolving role, speaking to the role of the central bank as a critical intervener within the marketplace, but also as well, what is its role in terms of addressing bigger issues like climate change, like the energy transition, and how do central banks in the context of either, whether it is financial crisis or dealing with transitions as economies move and change, how do we make sure that central banks remain relevant? So that is a big conversation, and so the discussion around what is the role of central bank, why is it intervening in such ways, Mr. President, is not one that is specific to Barbados, but it is one that is engaging internationally. And I want to also say, as well as I would have indicated, Mr. President, in my presentation, that the issue of the central bank intervening specifically in the issue of the setting of bank charges and fees, again, is not Barbados specific either. So this is not the Barbados Central Bank intervening in a way that is not familiar in the context of how other central banks around the world are also operating within this particular area in order, again, like I said, to safeguard financial inclusion. And I repeat as well, Mr. President, that notion of financial inclusion is one, again, that is part of the literature around the role of central bank and creating a strong regulatory framework in order then to be able to protect customers, Mr. President. Mr. President, I want to thank the Honourable Senator Tricia Watson for her questions. In particular, first, Mr. President, let me address the question about the need for comprehensive consumer legislation and regulations, and to say that we agree with her completely. In November last year, Mr. President, the Prime Minister established a committee that will be jointly chaired by the Leader of Government Business as well as the banking sector to look as Minister, the Leader of Government Business in her role as Minister of Consumer Affairs, to look at the development of a consumer protection regime, Mr. President. Sorry? As we speak, Mr. President, the government is working with UNCTAD as well to ensure that we create a modern commerce department which will be focused on a new and revamped consumer protection legislation. Of course, Mr. President, would have to go to Cabinet and then find its way to Parliament. So to just to say to the Honourable Senator, again, like I said, we are in alignment. The government is working on that improved and modernized consumer protection legislation on a number of different fronts, Mr. President. In respect to the amendment to Section 43, I believe the Honourable Senator was suggesting that we may have left out a particular section of that legislation that was in with the original Act. So that legislation, that the Financial Institutions Act legislation would have also been amended in 2018. And that amendment in 2018, Mr. President, would have made provision for Section 43(4), which would have indicated if, in the opinion of the central bank, a licensee is imposing charges that are unreasonable, the central bank may require the company to disclose the basis for the charges. This provision that is in 43(4) was also replicated in Section 95 of the existing Act. And therefore, all that happened was that it was felt that that provision was better suited in Section 95, and therefore it was removed from 43(4), and 43(4) tidied up. But if we look at the amendments of 2018 and what is there, essentially, Mr. President, we would find that all of the main parts of that section still remains as well. On the issue of data breaches, again, Mr. President, we, the government, is in full alignment with what was indicated by the Honourable Senator. I believe that we have been speaking to this issue about encouraging the banking sector to make sure that they can strengthen in their internal protocols to make sure that we avoid these data breaches, Mr. President, because we agree They are exposing consumer information, and it is important that we can be able to work together to be able to strengthen and to protect that, Mr. President. And again, in terms of looking at not only the legislation, but also as well making sure that all the banks have the proper frameworks in place as stringent as possible in order then to be able to reduce them, Mr. President, is again something that the government is in full alignment about, Mr. President, as well. I also want to indicate, Mr. President, that in respect of looking at the notion that the amendments to 95, for instance, should not just only focus on banks. You would note that it indicates a licensee, and then in the definition of the original act, it says a licensee as well is an institution that is licensed under the act. And that makes provision for a whole gamut of institutions there. So that while this focuses and it says a licensee is imposing a fee or charge, it doesn't only apply then to commercial banks, but to the range of the other institutions as well, Mr. President. In respect of specifically now Senator Mallalieu's contribution, again, always an interesting contribution from Senator Mallalieu. I think that there was sufficient on the floor from here and from other senators to respond to some of the comments from Senator Mallalieu. But just to say that there was no intention to, what was the word used? Perhaps, let me use the word, to victimize the poor banks. Yeah? I was very careful to make sure that I quoted from the financial stability statements of the central bank to be able to quote facts and figures. So I'm not so sure if the offense that was seemingly taken, Mr. President, is one that has a basis perhaps in any truth in terms of what was presented, here. I was fair to the banking sector as well to also indicate that yes, as was indicated, the banking sector has to be able to be aligned with a number of international regulations, AML, know your customer, etc. But also as well, we must also face the reality, Mr. President, that again in the context of the role of the central bank, as was spoken to, that these amendments, and I want to say that the Financial Institutions Act, I believe, was the first passing of this act was 2007. So this is not a new act. We're not seeking to put any new regulations per se. We are amending existing regulation that already gave this power to the central bank. And as well, in the context of the national payment system that was spoken about, and to answer the question very frontally as well, in relation to the appointment of members, I would inform the Chamber and also Senator Mallalieu as well that I've been informed that within the perhaps the next quarter or so, we will have all of the members for that national payment systems in place. Currently as well, we're going through the process of making sure that we have the necessary consultations, Mr. President, in respect of that. I will say no more. I think, like I said before, in relation to Senator Mallalieu's overall context, that has been well responded to. I just also want to say, Mr. President, that Senator Mallalieu may have made the assumption that we were speaking from the same book in terms of our statistics. Mr. President, as I would have indicated, I would have called the Central Bank Research Department and would have asked for some specific statistics, Mr. President, that I would have used here and that I would have quoted from specifically as was indicated in my presentation as well. Mr. President, I want to speak to the questions raised by Senator Nurse in relation to perhaps a more stringent reading of perhaps some more stringent language in the Amendment Act 95, and to indicate that, well, that may be desirable. Again, the central bank is also balancing its role along with the rights of the commercial banks, but also to say to you that it is not the intent that we are taking a heavy hand, that the central bank is taking a heavy hand. In the context of being able to intervene in the setting of the bank fees and the charges, the central bank will enter into consultations with the commercial banking sector in order then to be able to come to a reasonable approach, Mr. President, in terms of how both the central bank and the commercial banking sector as well can come to a place then that will allow us to give comfort to consumers as well, Mr. President. Mr. President, I think that, as I said, we've had a fulsome discussion on these amendments, which are, as I said before, intended to strengthen and also as well to build coherence among existing acts, the Central Bank Act, the National Payment System Act as well. It is about being sure that we can reduce the extent to which the commercial banks act arbitrarily, and I looked up the definition of arbitrary so that I would make sure that I was in good stead, Mr. President, and I stand by that, because arbitrary, Mr. President, because, Mr. President, in terms of being able to impose fees without giving notice or indication of an action, as well to give notion. The leader of government business, Mr. President, reminded me that I did not respond to the question of the definition of fees, Mr. President, and I want to note here, and this is again a legal opinion, it says that with respect to the definition of fees and charges, they take their ordinary dictionary meaning. They were not defined in the original act, either for the same reason. There's no special meaning to be given to these words, and the legislative drafting rules are that words that are only defined if they are to be given special meaning within the enactment. Otherwise, the presumption is that they take the ordinary dictionary meaning. Mr. President, I want to commend this bill to the Honourable Chamber and ask for the support of the Honourable Chamber for these amendments. Mr. President, I beg that Your Honour do now leave the chair and the Senate. Sorry, Mr. President, I apologise. I do beg that this bill be read a second time.
The question is that this bill be read a second time. Will all honourable senators in favour please say aye. Aye. Those against please say no. I think the ayes have it.
Mr. President, I beg that Your Honour do not leave the chair and the Senate resolve itself into committee for further consideration of this bill.
The question is that I do not leave the chair and the Senate resolve itself into committee for further consideration of this bill. Will all honourable senators in favour please say aye. Aye. Those against please say no. I think the ayes have it.
The Senate is now in committee.
Clause 1.
Madam Deputy Chair, I do not beg that Clause 1 stand part.
The question is that Clause 1 do now stand part. Will all honourable senators in favour please say aye? Aye. Will those against please say no? The ayes have it.
Clause 2.
Madam Chair, I do not beg that Clause 2 do now stand part.
The question is that Clause 2 do now stand part. Will all honourable senators in favour please say aye? Aye. Those against, would you please say no? The ayes have it.
Clause 3.
Madam Chair, I do beg that Clause 3 do now stand part.
The question is that Clause 3 do now stand part. Will all honourable senators in favour please say aye? Aye. Those against, would you please say no? The ayes have it.
Clause 4.
Madam Chair, I beg that clause 4 do now stand part.
The question is that clause 4 do now stand part. Will all honourable senators please say aye? Those against, would you please say no? The ayes have it.
Clause 5.
Madam Chair, I beg that clause 5 do now stand part.
The question is that clause 5 do now stand part. Will all honourable senators in favour please say aye? Those against, would you please say no? The ayes have it.
Report.
Madam Chair, I do not beg that you report, to Your Honour, the passing of one bill in committee.
The question is that I do now report to His Honour the President the passing of one bill in committee. Will all honourable senators in favour please say aye? Those against, please say no. The ayes have it.
The chairman has reported the passing of one bill in committee.
Mr. President, I beg that this bill now be read a third time.
The question is that this bill be read a third time. Will all honourable senators in favour please say aye?
Aye.
Those against please say no. The ayes have it.
Mr. President, I beg that this bill be now passed and be cited as the Financial Institutions Amendment Act 2024.
The question is that this bill do not pass and be cited as the Financial Institutions Amendment Act 2024. Will all honourable senators in favour please say aye? Aye. Those against please say no. The ayes have it. This bill is now passed and so cited. Senator Cummins.
Mr. President, I beg to move that the sitting of the Senate be suspended until 3 p.m. for lunch.
The question is that the sitting of the Senate be adjourned until 3 p.m. Be suspended until 3 p.m. today. However, senators in favour, please say aye. Aye. Those against, please say no. The ayes have it. The sitting is suspended until 3 p.m. today.